How to get enlightened in your trading, meaning how to accept the outcome, regardless of what it is, profit or loss. How to not get tempted and feel panic and wanting to justify or readjust your stop loss or your take profit level in the middle of a trade. Hi, this is Load with Black Bear Dog Trading, as always. Welcome, and that's the topic of today's video. I'm going to shed some light on what I believe to be is probably the biggest downfall that many traders are faced with. And that is the moment they're in a trade, they somehow, their brains start to become scattered, their emotions become scattered, and they're starting to do things that they deep down know they shouldn't be doing, but somehow can't help themselves. How do you overcome that? How do you become a solid trader that accepts the outcome for better or worse? Well, it begins by asking you two questions, and only two questions. And the questions are, number one, am I following the rules of my trade? If you answer no, or even hesitate to answer, already there you have a problem. Your trade, your strategy has rules, and whatever these rules are for you, you must stick to those rules. After a trade went against what your rules said the outcome should be, instead of jumping into another trade, immediately analyze why did it end up being a losing trade? Where did it go wrong? Why did it result in a loss? Don't just let your emotions get the better of you and say, oh my God, I lost X dollars. I better try now to see if I can get it back. That's throwing good money after bad money, and it rarely, if ever, works. The second question is that you should ask, which I've already answered, if I didn't follow the rules, what caused me to go against the rules of my strategy? Was it that perhaps you set your stop loss a little too big, you risked a little bit too much money, and the trade went against you, and so now you went in panic mode? Was it that maybe perhaps you set your take profit too high, too great, and you reach X dollars in profit already, and now panic sets in, afraid you may lose that profit, excuse me, and so you just closed out a trade? Whatever that answer may be, again, analyze before you jump in the next trade, so you have conclusive answers to those two questions. One, did I follow the rules of my trade? And two, what made it break down if I didn't follow the rules? Don't talk about profit and loss. Don't talk about your emotions. Don't be your self-judge saying, darn it, I shouldn't have done this, darn it. Don't have self-pity, it doesn't work anyway. And just keep strictly diagnostics on the foreground. Meaning, you enter the trade, take a deep breath. And you lost, analyze, why did you lose? It'll go a long way. I call it Traders Enlightenment. And given that we are right in the smack dab Christmas season, it's a perfect title, Enlightenment. Because this time of the year, a lot of people seek enlightenment. So traders, here is your enlightenment. Take a step back. Focus on the process more than the profit, more than the loss. In fact, you should focus on the process only. And when the process, being the rules of your strategies, are not working or not producing the result over X period of time that you are looking for, that's a signal you need to refine-tune your rules. You need to make new rules. You need to change, adapt. Basically, you need to alter your strategy so that eventually it will match the rules of your strategy and you will follow the rules to the end. I'm going to illustrate a little bit what I mean with not following the rules. Let me get myself out of the way here a little bit. There we go. So I'm sitting here right now with Euro USD in the 1 hour chart. And let's just say hypothetically, I was in a trade and that I entered my stop loss here. I entered my actual position here and I set my take profit to here, hypothetically, of course. This is roughly a 2-to-1 ratio. Now, as you noticed already, just by looking at it, while this trade went most definitely in my direction, it started to have a bounce or a retracement, if you will, right around here. And it was triggered right around here. Actually a little higher up, but right around there, which means that my take profit target, this line right here, was never reached. And now what do? Well, just for argument's sake, let's say that we entered or we set a stop loss here of $100, which means that basically I have a take profit here, I'll put it a little higher, of $200, right? But since it got triggered here at that point in time, for argument's sake, again, let's say I was at $180. Now what happens with a lot of traders? At this point in time, panic sets in. Well, I rather take this because it's starting to go down now than not getting this at all. So that is what panic trading is like. And that is what happens when you do not follow the rules of your strategy. If your rules are set at a 2-to-1 profit target versus your loss, then you need to shoot for your 2-to-1 profit target regardless of the outcome. You would not have met any of this, well, you would not have met any of that. And then instead of jumping right away onto a new trade, take your time, take a breather, even take 3 to 5 minutes if need be to analyze what went wrong here. And perhaps, maybe you shouldn't really aim for a 2-to-1. Maybe you should start out in the very beginning at least just to test your strategy to see if it's really working, if it is actually producing what you want it to produce. Maybe perhaps you should aim for only a 1-to-1. Put greed aside, that's not really, there you go, roughly 1-to-1. Now, when you look at this, your profit would have been triggered right here. And the $100 that you had originally set as your loss potential right here, you would have now earned right here. So perhaps you need to start with smaller steps, and perhaps you need to go back to square one. Square one being let go of greed, number one. Number two, make realistic targets, not unrealistic targets. Yeah, I know there's a lot of talk going around. I don't enter a trade unless I'm absolutely certain I'm going to have a 3-to-1 ratio. Well, let me tell you, some people go as far as 4-to-1 and some even dare say 5-to-1. Well, let me tell you, nobody can predict that. Nobody. I don't care how good a trader you are, what professional level you're at, you cannot predict whether you're going to hit that kind of a profit target. Don't forget, trading, despite everything that is involved with it, all the algos, all the bots, all the analysis of bars and multitude of bars and stop loss and take profit and trend direction and retracement and breakouts and so forth and so forth and so forth. Despite all of that, nobody is able to predict the future. Nobody. And those that did make it, I'm going to use a word that I rarely ever use. They were just lucky. Yes, they did their due diligence by analyzing the markets. Yes, they read the news probably or whatever they did to come to the conclusion that this is where it was going to end up. But in the end, they were lucky. And it's really part of trading. And you need to accept that. You need to accept that trading is not ironclad set in stone. Trading adjusts the way markets adjust. And you need to be flexible enough to go with the flow. I've said it before. So you need to separate yourself from profit and loss. You need to separate yourself from blaming yourself for, oh my God, I should have stayed in that trade. Darn it, I would have hit it if I would have just stayed. Or, more than anything, greed. Like right here, you should have said to yourself, man, I went out too soon. I could have had, like what, another 50 bucks right here? Man, no, stop. Stop self-judgment. It doesn't serve anyone, least of all yourself. So what do? Well, first of all, you make sure you actually have a real strategy, one with rules, and rules that you've tested, and rules that you know are long-term profitable. Doesn't matter if it's 10%, if your profit in the end is larger than your losses, you have a profitable strategy. So don't get boggled down by my trading strategy has 92% success rate. It's hogwash. These numbers mean squat. Seriously. What matters is long term. What matters is in the end. If I used to own a mini market many years ago. There were days I literally made, and I'm not exaggerating, I literally made $5 in sales all day. And that was starting at 7 in the morning and closing the store at 9 o'clock at night. And then on top of it, that was not counting all the extra work I did prior to opening and after closing, prepping for the start of the day and prepping at the end of the day for a new start of the day. And then there were days that in half a day, I did well over $2,000 in sales. So my entire week of selling $5 a day, which led me to basically making gross profit of what? I was open 6 days a week, 30 bucks. And yet, the very next day, come Monday again, because Sundays I closed, boom, I made $2,000 in half a day. That wiped out all the loss. And yet I had what? If I compare the percentage, a 1 in, what is it there? Point, so I had 5 total, so that's 100%. I had 5% profit margin as far as when I had productive days. But yet that 5% was well worth it for me to stay in that business. And I did for 10 years. And it proved to be very successful in the end. The same goes for trading. You need to stick with your rules and you need to let go of all these things that you hear, especially on the internet nowadays, where so many will lead you to believe that they have the golden nugget, that they have the cup that will give you all the profits you seek and then some. Trust me when I tell you this. Been there, done that myself. And if it really did exist, there wouldn't be a single person on this planet not being involved with trading. Because it literally would be the money machine that so many claim it is. Trading is a money maker. It is. But it takes work. It takes diligence. it takes perception, it takes strategy, it takes all sorts of things, and you need to stick with it. Don't jump the gun. Don't let your emotions get the better of you. Don't let greed control you. It's true what they say. I rather have a small piece of a pie than no piece at all, because small pieces add up in the long run. No pieces do not add anywhere. So in my humbleness, my trading, I aim for a 2-to-1 ratio. I've done this long enough now that I know that I can hit that. And I aim for usually $100 loss per trade, which means $200 profit. And there are plenty of times that I did not make that I came just short of $200. And then the market reversed, and in the end, I ended up losing $100. But I don't regret it one bit. Instead, I analyzed how come it didn't trigger the 200. It was so close. So what you do before you enter a trade, right at the very beginning, when you've entered a trade and you see your actual stop loss and take profit on the chart, if you have the slightest doubt, adjust it a little bit. Make your stop loss a little smaller and make your take profit a little smaller. Until there comes a time that you know exactly where you're at and you know that what you do is profitable. And by the way, that is what my simple EA that you see on the chart right here is all about. It does all this exactly for you. It lets you find a trade, and it will enter automatically for you your stop loss, your take profit at the ratio you set. And once you set it, you can always define it right there and then. This is based on average true range, meaning what was the range of price up and down over a certain period of time. The period by default is usually 14 days. This is what's commonly accepted with trading. ATR looks back over a period of 14 days and gives you what the average height of a bar was, the average low of a bar, meaning the average height of price, the average low of price. And based on that, this simple EA will enter a trade, and based on your chosen profit ratio and your stop loss, of course, will set your profit and your loss target. And let me show you a little example here. I will actually manually enter a trade right here because there is no trigger. Everything is here. This is above, but it's all no, so there is no trigger. I'm going to manually enter a trade to show you what I mean. I usually take one lot size. You take what you like, but I always have one lot size. That's my chosen preference. I don't bother with a percentage or half a lot size, or I just one lot size regardless of currency pair I trade. In this case, I'm going to enter a sell for the simple reason that candles are down even though they are above the 55 EMA. So I click on sell. Here we go. I now am set up. Since this was a manual trade that I did, I will have to set my stop loss and take profits, which is very simple. You drag lines. For example, here I go. It shows me I'm risking $193. And if I drag further down, let's say all the way up to here, now it's saying if this goes according to my plan, I will win $225, a little bit more than a 1-to-1 ratio. So at present, as you can see here, I'm in the minus, which is normal. Every trade starts in the negative because you have a spread to contend with. The broker wants his or her money too. So now, as I'm looking to this, just for argument's sake, price reverses and starts to go up. And more up. Here, and it looks like my $193 are getting triggered. And now I become panicky and I say, you know, that's really more money than I wanted to lose. Well, take your stop loss and drag it down a little bit. Now I'm at $130 less. Now let's take the reverse. Price is going here and it's starting to go my direction. And so now the trade went down, but for whatever reason, it didn't completely trigger my profit right here. So in that case, now panic sets in. And I'm saying, well, rather take this than, you know, it may reverse back. Again, use the same concept. If you find that this amount that you set is too high, set it a little lower. Just move your, like this, drag it up a little bit so you make a little less. And if you want to have it to a real one-to-one, make it even less still. There you go. I mean, you need to have rules and you need to stick with these rules and you need to stop making it emotionally devastating for yourself. And if this turns in a loss, it turns in a loss. It's just as simple as that. You have to realize that trading is not about constant profit. You are going to have losses. Even with my simple EA that I now show you, I have losses, but it minimizes my emotional part because the EA does all the analysis for you, as I said, based on ATR, average true value. And that's why it had not entered the trade. I did this manually, and the result so far is that I'm losing $33. So if I find that even during an automated trade, well, you know what, this seems to retrace, or you know what, it doesn't matter what is happening. I don't want to lose more money than that. Close the thing. Click close and you're done. You're out. So I lost 38 bucks. It's part of it. It's part of it. You need to have rules. You need to follow your rules regardless of the outcome. And when it ends up going against what you thought it would be, instead of jumping right away into a new trade, hoping to recover some of your losses, take 3-5 minute break and analyze why it didn't go the way that you thought it would be going. And then readjust, fine tune. Again, that's why this simple EA is so useful. It does this automatically. It automatically adjusts based on ATR. It has factors. Let me show you. While it clearly says this is an advanced setting, it has factors built in right here that you, if you know what you are doing, can fine tune so that you get the best possible results. And based on these factors, the EA will act and react. You need to get out from putting yourself in buckets. And you need to start accepting what I like to believe are 3 rules for trading. 1, good process, good outcome. You got to win, of course. Good process, but you had a loss, bad outcome. Which is good because you followed your rules, and that's important. And third, bad outcome, but a bad process, excuse me, but good outcome. That is still good, although you didn't follow your rules, you had a profit. The worst is bad process and bad outcome. You didn't follow the rules and you had a loss. So again, take a deep breath, get enlightened, use this to take a step back, review your charts, review what you're doing. Don't be greedy. I can't say this often enough. There is more than enough money in the trading bucket, if you want to call it that way, to make everybody stinking rich. There, I said it. So don't be greedy. And if push comes to shove, that you really cannot get a hold of your emotions, no matter what you do, no matter how true you stay to your rules. You have 5 losses in a row, 6 losses in a row, and it really just is getting the better of you. Perhaps, just perhaps, trading just isn't your shtick. Walk away from it. There is no shame in that. And look for something else to do that is your spiel. You know, this is what you do. You take a realistic approach. Last but not least, patience. Patience, patience. I cannot say this often enough. Jumping into a trade because you feel all the stars are aligned? No, wrong reason why you jump in a trade. The reason has to be you jump in a trade because all the analytical part of it, the diagnostic part of it are aligned. And now outcome, good or bad, doesn't matter. As long as you did the process. So download the simple EA, it's free. It's an upgraded version of the original one that I posted online a few days ago. Again, this has the advanced feature added to it that the other one didn't have. I didn't want to bombard you with too much all at once. This is the complete. There is no additional upgrade coming out after this. This is the full version. No limits, no restraints, no time frame, like expired after a certain time. It's fully functional, and it does work. It also comes with a little booklet that explains the advanced part of this EA, and I recommend you download it, install it on MetaTrader 4, and start using it. And a little brief explanation, what does 2 and 1 mean? 1 means the most recent closed bar, 2 is the second most recent closed bar. And the numbers are here because they coincide with the numbers over here. So based on what you see here, you then know what bar or candlestick I am talking about, this EA is referring to. And again, you will also notice that the maximum height that must be achieved by each bar individually is constantly changing. Again, that's because of the ATR value. While in the past it was fixed at 25 pips, now it constantly fluctuates back and forth, A, based on momentum, B, on liquidity and volatility, market moves, price moves, and all these goodies. Anyhow, this is it for now. Yes, you can get enlightened. Yes, you can be a profitable trader. Yes, you can do this long term and be successful at it. But stick with the rules. And if the rules of your strategy do not work, modify it, adjust it. With this strategy right here, simple EA, you have a good working strategy that at least will give you a solid start. If you're a brand new beginner, this is absolutely perfect for you. And even if you're an advanced trader, you can use this to teach yourself to stay calm and not to jump to conclusions, and to stick with the rules and stick with diagnostic, and yeah, let the trade do its thing. Okay, this is Load with Black Bear Dog Training signing out. I'm glad you were here joining me in this today, and I want to wish you all a fantastic and safe holiday, Merry Christmas, Yuletide, Hanukkah, whatever it is that you're celebrating there, and we'll see you probably after the new year. Till then, take care, and as always, God bless.